GM, good morning. Welcome to the Milk Road Show, the daily crypto show where we explain crypto like AI explains everything, confidently, even if we're not 100% sure. I'm your host, Jay Hamilton, and today we are joined by Michael Nadeau, founder of the DeFi Report, an industry-leading crypto newsletter and on-chain data research analysis that they break down tons of what is happening on chain in a very detailed way. Honestly, one of the greatest accesses research and resources out there. We're going to talk about, is it time to sell your ETH? Michael wrote a deep dive on the Ethereum ecosystem earlier this week. And so we had to get him on the show to break it down and talk about what he's seeing and is he bullish or bearish on the long term of ETH. We're also going to talk about Michael's short term outlook, Trump, AI, macro. There's been a lot that's happened in the last 3 months that has really led to this leg up in where we are in the market. We're going to talk about how does Michael see the outlook short-term, long-term for the rest of 2025 and why he's rebalancing to cash right now. And then we're going to wrap up with some of Michael's highest conviction tokens as well. We're going to talk about Venice and VVV token, new token that just dropped earlier this week. Want to make sure you guys are up to speed on that. Before we jump in, favor for you guys, if you like this show, wherever you're listening, podcast, YouTube, if you could give us a like, a subscribe, a comment, all of that helps us grow the show, make it better for you, and get better guests on in the future. Before we jump in, we're just going to take a minute to hear from our sponsors. Meet Odos, the DeFi aggregator that makes your token swap smarter, faster, and a whole lot easier. Tired of trading like it's 2019? Odos finds the best prices for your swaps across 900 liquidity sources and 14 blockchains, so you always get more bang for your crypto buck. Whether you're swapping, setting a limit order, or just avoiding gas fees like the plague, Odos has you covered. It's like having a genius trader in your pocket, minus the coffee addiction. Join 3 million wallets already using Odos to power over 6 billion in monthly trades. Start making smarter swaps today at milkroad.com/Odos. Michael, welcome to the Milk Road Show.
Great to be here, Jay.
I should say welcome back. This is your third time on the show, but your first time where it's you and me because you've always been on with Kyle. So excited to jam with you today.
Yeah, man. Glad we got the A team for this one.
Oh, ouch.
Kyle, don't tell Kyle.
Sorry. Okay, let's start with just zoom out. What are your thoughts in terms of where we're at right now? Kind of evaluating the past 3 months, the bull that we've had so far, and where you think we're going for the rest of 2025.
Yes, quite a bit going on out there in the markets right now. I think, from my perspective, what I'm trying to do is really kind of assess, I would say, two things from a very high level. So you've got basically Trump and the Trump administration coming in, and there's some very direct impacts to crypto there, obviously, with what's happening with a new SEC chair coming in. You've got Hester Pierce was just appointed as the SEC division for crypto. You've got the strategic Bitcoin reserve or stockpile, and then you have deregulation of the space and potentially new regulation for stablecoins and crypto broadly. So you have all these direct impacts to crypto that Trump is bringing to the market. And I think I think the market has been pricing that in, right, over the last, I would say, going back to even probably middle of October, when it started to become clear that Trump was going to become the president, or at least in the polymarket polling, was winning. You started to see crypto starting to move even at that point. So from my view, that part of sort of where we're at in the market has been priced in. What maybe is the one outlier there in terms of what could push the markets higher is the strategic Bitcoin reserve piece, which, we did see an executive order on this. And what it's basically saying is it's going to be a strategic stockpile. It could have Bitcoin. It could have other assets in it as well. There's basically going to be a 180-day grace period where this team is going to decide on what to do there. So it's probably not going to be until sometime in June, July, where we get
July 23rd is the
July 23rd. Yeah,
that's the date when the report has to be submitted.
Okay, so we won't know for sure what's going to happen until then. That doesn't mean we're not going to see a big move in this area. It's possible another central bank or something tries to front run, the Fed here or the US here, and that would potentially kick off, a move for Bitcoin. So that's the one outlier I would say is not fully priced in, I guess you could say, with Trump. That's kind of how I'm thinking just about Trump and what he means for crypto right now. The other piece of this is just sort of the indirect impacts that Trump has on crypto, and this is really through how his administration and basically what's going to happen with the broader economy and policy, and how he's going to get along with Jerome Powell as the Fed president, bring in a new Treasury Secretary with Scott Bessent. What does that mean in terms of like interest rates, in terms of global liquidity and the things that really matter for crypto? And so I'm kind of like looking at both of these things and then sort of peeling back and saying, okay, we've gone, Bitcoin's up 6x or so from the lows in 2022. I think Solana's up, if you go all the way down to the bottom when it was $10 or so, it's up 28x or so. You've got a bunch of other things that have transpired already this cycle with meme coins, with AI coins. We've seen innovation play out. We've kind of seen all of the things that you typically will see in a crypto bull cycle. That does not mean that the markets have peaked, and I'm not making that call right now. What I am saying is, like, I think it's a fair time to look at it if you've been in the market from the lows, or even maybe from prior cycles as well. I think it's perfectly reasonable to be rebalancing the cash here and sort of setting yourself up potentially for a correction. Bitcoin has only had 130% correction so far in this cycle. There's a lot happening right now with sort of this Trump transition, and I think the markets are trying to sort this out. We've got the dollar is still almost up at 108. Interest rates are still high. Inflation is still scaring people. So there's a chance that we get like a sort of liquidity trap here and a little sell-off. And I'm trying to position myself for that and then be ready for the rest of the year, because I still think there's a number of bullish catalysts later this year. So
yeah, super interesting, because I'm feeling very similar on the Trump side. I'll agree with you that it feels like it feels like Trump effect is kind of priced in. We've had the trade, right?
Yep.
Like that happened basically, as you said, leading up to the election, and then it really kicked off once he won. And we basically got that. The only thing is we had Matt Hogan and Ryan, the Bitwise boys, on the show last week, and they made a really good point, which was that there is a lot of corporations, professional investment institutions, and then other governments, as you said. Those three, as Matt called them, the three horsemen. He was like, I don't really know what they're going to do, how fast those three will move, right? Yeah. So if those three move fast and want to front run, right, then that could be a catalyst that comes. Tough to know when that catalyst comes. It could come soon, or it could come later in the year. So that's the only thing I'm not sure of, because I know that there's a lot of people that, a lot of corporations sitting on the sideline because they're like, I don't want to mess around with holding crypto, right? Like, but now they see, even though the regulation hasn't changed yet, and I know we're not getting the regulation necessarily anytime soon, and everybody seems to agree that regulation is probably a Q2, Q3 thing, is by the time we'll like actually start to see some stuff come through. So that's the one thing I'm not sure of. The macro side is the side where, as you said, that's really that's what's really going to affect the markets and make that's the biggest catalyst for sure. And that's the side where the timing keeps getting pushed back. It feels like liquidity is going down right now, not up. It's going backwards. Like, that's not what we want to see.
Yeah, that's what I'm looking at. Is China is in macro is a big picture to sort of paint, but you have things happening in China with basically in deflation. I mean, if you look at the yields in China right now, so you've got like a liquidity coming out over there. You've got the Fed is still doing quantitative tightening, right? We were rolling off assets on the balance sheet, so we're still tightening. We're not seeing the liquidity injections that we saw with like the BTFP program after the Silicon Valley banking crisis, some of the other programs that were in place. So liquidity is kind of coming out of the market right now. We know that Trump wants lower interest rates. He said it in a press conference the other day, and they asked him, is Powell going to listen to you? He kind of said, yeah, he thinks he will, right? So there's going to be pressure.
No, he won't.
Yeah, exactly. So there's going to be pressure there. We don't know exactly how it's going to play out, but I do think that from the macro perspective, that Trump's policies, like like sort of onshoring businesses, tariffs, these things that are like sort of pro like American exceptionalism, these things require a lower dollar to me. And so that is the thing that I'm really anchoring to. So that is one of the reasons I am actually bullish, like longer term for 2025, is I do think that we are going to see a lower dollar. I think rates I think the market is actually off sides in terms of the number of rate cuts. I just saw the GDP Now forecast came out for Q4. It was 2.3%. It was expected to be like 3%. So the economy might be slowing more than we think. And so I do think we may see more rate cuts in 25 than we expect, more liquidity injections. We have to refinance about a third of the outstanding treasuries as well. Like, who's buying all of that? I think the Fed is going to end up being a buyer of that as QE. So that's kind of the longer term picture. Like, there's almost no way out of the sort of fiscal situation. And then that's the key thing to anchor to, I think.
Yeah. So, and that's why I still have yet to get somebody on the show that's like, the bull run's over, we've peaked. Like, nobody has
Right.
that. It's the short term that there is
Yep.
there's no consensus on the short
Yep.
term. So just play out uh play out how you think 2025 goes. I know you don't have a crystal ball, and I'm
Yeah.
not going to play this back for you next year and
Yeah.
expect that you are perfect, but just right now, what do you expect from the markets?
Yeah. So, I guess right now I'm looking at sort of what's happening with liquidity, sort of coming out of the market. I think Bitcoin has actually been holding up pretty well there, which is interesting to me, and it signals to me like something could be going on. There could be a large buyer of Bitcoin in the market. That it could be a central bank that's actually not. It's smart for central banks to not talk about it if they are going to be buying Bitcoin. So
Sure.
possible you have something like that going on. I'm looking at that. Bitcoin's holding up very well. The rest of the market is not, and you can see like just the performance of altcoins and Bitcoin dominance is still almost about 60%, which is pretty high. So the way I'm looking at this is like I think we may see a little bit of a liquidity trap here sometime in Q1. That may be a good time to step in and be a buyer of risk assets, because I think ultimately that's going to kick off just more liquidity injections. And so that's kind of my base case. In terms of what I expect to see with crypto, is there's still some major announcements coming, like with Monad, later this year, with Mega ETH, with Barachain. Like, there's more innovation coming. There's interesting things still happening on the cutting edge of AI agents and sort of that sector. So you still have like that innovation stuff happening. If you get a bunch of airdrops with some of these new projects, that sort of like creates a wealth effect in crypto that we haven't had one of these in a little while. So that can kick things off a little bit. So, I'm still bullish. And like my base case that we would get to like over 7 trillion of total market cap for
Total.
crypto. So that's still a big move from here. And, the sixth through the ninth innings of like a crypto bull run are when the massive move happens. And that's why you have to be in the market, because most of Bitcoin's like appreciation happens like over like 10 days in a year. There's been some interesting analysis around that. Kind of a convoluted answer, but like bullish long term, short term, I see some risks out there.
Yeah, we're at 3.6 trillion total market cap as of this recording today. So your base case is a 2x from here. I know we've had people predict anywhere from 6 is probably the low, and then lots of people saying 10, even up to 12 on the high end. So I mean, we always have a big range with predictions, and everybody knows what predictions are. We do our best, but we don't have a crystal ball. Okay, let's go to ETH. You wrote a report earlier this week. I mean, you write a ton on ETH. You are deep diving on them like constantly. I think once a quarter you're coming out with a new report. So let's talk about ETH. And the big question on everyone's mind is like, should you sell your ETH right now, right? Or is this the bottom? And everybody's saying they're changing their name from .eth is the finally the bottom is in. It's obviously very difficult to know. I'm going to bring up. Well, you give us your overall take and your thoughts, and then I'll bring up some charts here that we can talk through.
Sure. Yeah. So thoughts on ETH. I mean, this is like it's the chart just doesn't want to capitulate. Like, I've been talking about this for a while, expecting ETH BCT chart to basically capitulate and to bottom out. and it just keeps making lower lows. So just recently, like we made an even lower low, and I've been looking at this and just waiting for the trend to reverse. What we're seeing here is like I've just kind of squared off like where we were exactly at this stage in the 21 cycle, and we were actually lower. The ETH BTC ratio was lower, and at the time, Bitcoin maxis were like basically rejoicing. You can see it was at the bottom of a downtrend in that box right at the end of January of 21. And Bitcoin maxis were like dancing on ETH's grave, and people were like capitulating on ETH, which is kind of similar to what you're seeing today with .ETHs dropping their name. To do well in markets, you cannot be with consensus. And so the big question here is, if you're with consensus and you're selling your ETH right now, you're in the herd. You're probably in the herd. The non-consensus move is to actually flip from SOL to ETH right now, and maybe catch the uptrend. I don't have strong conviction on this. I still have about 10% of my portfolio in Ethereum, so I haven't like been one of these people that just like totally moved to Solana. I think that for me, the way I'm thinking about Ethereum, and we can get to like sort of what's happening and the fundamentals, but they've essentially disrupted themselves from the perspective of this L2 roadmap, and what's happening with fees are basically moving to L2s, and Ethereum L1's value capture has essentially moved to the L2s, and with some technical upgrades such as EIP 4844, the fundamentals have sort of disappeared in the short term. This is something we've been covering. We were expecting this to happen. What we didn't expect to happen was like the sentiment to shift as harshly as it has as a result, because I'm deep in the on-chain data. I'm looking at it and I'm just kind of like, all right, everything's moving the way we expected it to. It looks like everything that the Ethereum Foundation laid out for the market has essentially been playing out. I don't think they came out and said, hey, like Ethereum fees, L1 fees are going to go down. The yield for Ethereum staking is going to be dropping. Like, I think those things are spooking the market, and people are not really looking at some of these fundamentals, which we'll get to. But this chart that you just pulled up is just looking at total transactions, the L2s combined. That's the pink line. And then you have Ethereum L1, which is the purple line, and that's pretty much been steady, really going back to like 2020 or so. It hasn't really changed much, but all the transactions are moving up on L2, and that's where things are scaling. So Ethereum's doing about 10x the number of transactions on a daily basis on L2s as it is on L1 right now. That was about 3x about a year ago. So like things are playing out. It's scaling. Interesting stuff happening with Base, some of the other L2s. And to me, like, Ethereum has to win the institutional game here. Like, that's really what this comes down to. Like, if I start to see, I will capitulate on Ethereum if I see Larry Fink come out and he's been talking about tokenization and how important this is. If he comes out and says they're going to do stuff with Solana and it's like exclusive to Solana, right? That would be like the moment that I think the market would reprice very fast. I don't think that's going to happen, and I haven't seen any signs that it's going to happen. And we've seen other sort of challenger protocols or assets in crypto like do what Solana has done to Ethereum in the short term, and then not really followed through in the real like fullness of time. People forget that like SushiSwap like sort of was like flipping Uniswap at one point, like in the last cycle, and that didn't sustain. And like, so to me, like, this is going to play out with what happens with the L2 roadmap and whether or not institutions come into ETH and build their own L2s. I think there's an incentive for institutions to do it on Ethereum because they can capture value actually more cleanly through an L2 versus doing it on Solana. If there isn't like an L2 roadmap on Solana, which there probably will be, that's a separate discussion. But to me, that's kind of how I'm thinking about ETH. It still has a strong fundamental story. It's executing on the roadmap, but like the crypto markets are incredibly impatient. The narrative has flipped. There is the fact that Solana is sitting there and has basically caught up on a lot of the important fundamentals, has essentially, basically got the market completely offside. Like, the pendulum has completely swung to Solana. So to me, that opens up an opportunity for ETH potentially, but I can't say I have real strong conviction on it just yet. I think I need to see see more in terms of like what are institutions going to do with this tokenization story and real world assets. So
Mhm. Yeah, it's it's a very interesting moment for ETH
yeah,
because the sentiment and the fundamentals could not be any further
yeah,
apart, right?
yeah.
So, you know, if you weren't listening to media or crypto Twitter, you'd look at ETH on chain and you'd be like, great, roadmap's going according to plan. The scaling of L2s is working. Sure, there's an issue around fees going to the L1, which I want to talk about in a second,
Yeah.
but fundamentally looks great and is still beating Solana. Solana's definitely catching up on a lot of the fundamentals, but it's still beating Solana. And I agree. Like to me, we've been trying to get Sony on the show for a while because I want to ask them the direct question, like, why did you launch an L2 on ETH? Because if they can explain that to us and tell us that story, then like that is a massive catalyst that could come. Is all of a sudden, as you said, if you're to me, if you're an institution, whether you're a financial institution or you're a consumer product company like a Sony or whether you're a retailer like a Walmart, like all of these companies are moving on chain. That's a given. I think we all know that. How are they going to move on chain? They'll probably want to control their own ecosystem and they'll want their own chain. What's the best way to launch your own chain right now? An L2, like using either the super chain or using one of the out of the box solutions, right? So that feels, and Solana doesn't offer that. As you said, Solana will eventually need their own L2s, which kind of makes me think that like, a few years from now, we might be sitting here having the same conversation about Solana, right? So, I don't know. It's very hard though, right? Because like everything is, I even admit myself, like I've sold some, I've rebalanced out my ETH. I've had to, right? Like I think, but I can't deny that, man, it feels like it also is the only one that has the ETF, right? Now, yeah, we're going to get a Solana ETF and we're going to get other ETFs for sure. When? Don't know. We just had James Seyfarth from Bloomberg on the show. He said, basically, if they, if Hester Pierce came in and this new subcommittee that's currently running the SEC, right, until Atkins comes in, then we could. It's possible they could do it in 45 days with some of these applications. So, like maybe I think the first. I think there's one in March. There's a deadline in March. Like maybe, but he was like, that would be super weird. We don't even have Solana futures. We don't have any futures for any of these ETFs yet. So I don't know. Like I don't know. It's really tough. Let's take a look at the fee situation though, because this is very interesting.
Yeah, so this is, what I've been trying to do here is like, okay, if we agree that the roadmap is playing out the way that the Ethereum Foundation had sort of set it to, and we say, okay, they're executing on that, then we have to start to look at the data and say, like, what does this mean in terms of value accrual to Ethereum L1, and which really is going to impact the yield that validators earn, that stakers earn for holding ETH, which, you just mentioned the ETFs. I think the ETFs eventually, I don't know if it's going to happen this year, but will start to be able to pass back that yield to the ETF holder, which I think is a big deal as well. And that Wall Street likes yield. So most of people in Wall Street would rather own something with yield than gold. So we'll see if there's a rotation from BTC there. So really what I'm doing here is I'm looking at the L2 fees paid down to L1. There's basically two fees. The first is the publishing costs. That's the first chart we're looking at there. And really the new one is the blob fees. This is basically the impacts of EIP 4844, where there's a new type of fee that L2s are paying to the L1s to store data there. It doesn't cause congestion with other L1 transactions. And it does allow for data availability for the rollups. And we can see there that like things are picking up. Like basically the L2s are now doing blob fees versus the initial publishing costs. So that chart's down and to the right. The other one is up and to the right. And so I'm starting to forecast out like, okay, if you go down to the blob fee chart, like what's the best day we've had so far in terms of blob fees? It was like January 6th, and the entire, L2s, all of the L2s combined paid about $277,000 to the L1, which is nothing, right?
That's it. That's it.
Yeah,
Oh.
that was the best day we've had so far. Ethereum was doing $70 million in fees per day at the peak of the 21 market. So this is the story. And we have to say, okay, well, if it did $277,000 in fees on January 6th, how many transactions did the L2s process and pass down to the L1 to create that? And it was about 16 million transactions. And so we can start to like sit back into, okay, if we're going to get to $70 million, how many transactions would that take? And it's over 4 billion transactions per day on the L1s. If you just sort of use that point in time for what the blob fee cost was there, over 4 billion, that's a 256x in terms of the combined L2 transactions of what we're seeing today to get back to like, $70 million in fees per day for ETH. That seems like crazy probably, but I think it's very doable actually. Like I think considering how many new like use case basically with regulation and institutions coming into crypto, I do think that that's like very reasonable for what we could potentially see. And the tech is kind of getting to the point where we could see that in the future. But that's a decent exercise. I think people should understand, like, as you're looking at the L2 growth, like, what does that actually mean in terms of value accrual to ETH L1 as we kind of model this out a little bit. So.
Yeah, I mean, you said this before we started recording, which is ETH basically disrupted itself, which is such a funny problem to have. Like,
right.
like they created this roadmap so they could scale. They executed on the roadmap. Everything's been going great, and as a result of it, they fucked their revenue, and so they have less revenue now, and they need way more scale in order to get back to that same revenue, which is good, like, because now they're prepared to scale. But the question is, will L2s take us there? It feels like they will. Like, it really does feel like, look at Base.
Base is doing, Base is the standout of the L2s. The way I kind of think of this is like, you could like think of it as a J curve, right? So it's like they've disrupted themselves to allow for this curve to play out, but we're sort of at the bottom of the J curve where like the disruption has happened, but we haven't seen all these new builders come into crypto and build interesting use cases that have millions of users on L2s. So it hasn't fully played out, but we'll see. Base is the story of the L2s. They did 84 million in revenue last year, which was double what Arbitrum did. So really standing out.
Does that make you like Coinbase as an investment right now?
I think I think it makes Coinbase an interesting investment. I really do. I think that's sort of something that like the Wall Street market like probably isn't really paying attention to. They're still too focused on like trading fees and stuff just on the Coinbase exchange. So yeah, I do think this is very bullish for Coin.
Okay, so you haven't sold all your ETH. You're keeping some in the game because you still believe that it could go where we all think it could go, and it could have a great run.
Yeah, it's just, I've seen it. We saw it last cycle. We saw that big rotation. The difference with this cycle is that Solana's sitting there, right? So like last cycle, like we didn't have clarity on Solana. So like when the markets took off last cycle in January of 21, there was a massive rotation to ETH. And then we saw the longer tail, we saw NFTs and everything came later. That has really played out on Solana in this cycle. And so that is really the key thing is like, are people going to still pull up coin market cap and they're looking at it and they're saying, okay, like Solana's up 28x, but it's still only a third of Ethereum, and that's wrong. And maybe they still allocate there. So this is the key question. I think it's a very tough thing to develop conviction on one way or the other right now.
What about if you ask the classic investor question, which is risk reward? If you were to compare, let's just say you're going to compare Solana versus ETH, you might even be able to throw Bitcoin into that conversation because of how well it's performing right now. Although I'd say most people would think that Solana and ETH most likely have more to go for the rest of this cycle. But if you were to compare them, which do you think has the highest risk versus reward, which has lowest?
Yeah. So I would say Bitcoin has like the lowest like risk reward, right? It's kind of like the index in this case, right? It's probably going to go down less and up a little bit less. And then you have ETH and SOL sitting there. And this is the key question is like if you're going to forecast out, where the total crypto market cap is going to go, the last few cycles, Bitcoin was about 40% of the peak of that. And so you can kind of take if you think the market's going to 7 trillion or so, double what it is, You can back into what that is for Bitcoin at 40%. And then you can kind of look at where ETH was relative to that at the peak last cycle. And then you can look at SOL relative to that. And then you can kind of decide where does the probability rest. And I think if you take the position that Ethereum has essentially been sort of, I don't know if it's been disrupted by Solana, but basically the amount of capital that would have gone to Ethereum in the past is a lot of that's now going to Solana. And so you start to figure out where the sort of probabilities lie there. I haven't done that exercise to tell you like this is what I think of it, but I think that's the proper like framework to bring to that and say like, okay, if you think you're going to 7 trillion, BTC is 40% of that, ETH is a certain percent of that, and then you say, okay, is Solana going to be 50% of ETH at the peak, or is it going to be 100%? And you kind of do your probability analysis that way. So
Do you think everybody that is going to has the Solana to sorry, the ETH to Solana rotation, is that done? Has that already happened, or is that, because that's another big question, is if that rotation happened in a big way, which, as you said, one catalyst would be Larry Fink or other large institutions saying, hey, we're building on Solana. But just without any catalyst, do you think that rotation has happened?
I think most of it has happened. I think if we see another leg down for ETH BTC or ETH SOL, like to me, that is the final capitulation of like the dot ETHs like actually doing it right with, and this is what happens at bottoms, right? Like you saw this final leg down, even when you were looking at when I was studying Solana at the end of 22, right? It was this is after FTX and everything. Like there were these final just capitulations, and like if I see something like that, like that's, I think you want to buy that for Ethereum. At some point, it just gets too oversold that the risk reward flips, to the upside, and like that would be like it's a tricky. It is really a tricky one, because to me, like that could be the moment that Solana like gets closer to flipping ETH as well, right? Like because it could happen faster, because you could look at it and say, okay, Solana has to grow like 3x as fast as Ethereum to flip it. Or you could say, well, what if all these people that are holding ETH, these like really long-term holders that have a lot of it, flip to Solana, then Ethereum's dropping at the same time Solana's going up, and it can happen like faster. So I think for me as a market participant and an investor looking at this, what I'm really doing is looking at like what are institutions going to do. To me, that's the thing that's really going to matter. If institutions go to Ethereum and they don't go to Solana, like Solana's not going to like play out the way everyone thinks right now. I don't think anyways.
I'm just pulling up ETH ETF.
Yeah.
Negative outflows of 130 million yesterday. That's not what I was. I was hoping to have something to say the ETH ETF was ripping.
Yeah.
I mean, it has started the year off fairly well, and it is up to net flows of 2.7 billion. So it's not a dead rock like everybody thinks it is,
right?
But it's still, it has good days and it has inflows and outflows. So yeah.
Okay.
Go ahead.
Sorry. No, I was going to say the other thing to think about here is just like Bitcoin dominance, and like, are we fooling ourselves? Like something I've been thinking a little bit about is just, we tend to think that Bitcoin dominance is going to drop and there's going to be this alt season, and like that hasn't played out just yet. And like, it's possible that doesn't happen this cycle. So, and that's sort of what, Bitcoin maxis have been preaching for a long time. And I think they've been right so far in this cycle, is that like Bitcoin's the alpha asset. It's different. It's the fully decentralized thing. It's proof of work. And these other things are governance tokens. They're kind of useless. And like, we've kind of seen this, and you're seeing meme coins and just like financial nihilism play out. You're sort of seeing that play out where altcoins are kind of getting killed. So that's something to keep in mind. And then if central banks start buying Bitcoin, to me, that actually makes Bitcoin no longer a risk asset. It actually becomes a safe haven asset almost immediately if that starts to play out. So that's another thing and that will totally change like Bitcoin dominance, I think, over the long term as well.
Mm-hmm. Yeah. It's tough. It's tough out there.
Interesting time in the markets for sure.
Very interesting. Yeah, very interesting. Let's go to, before we wrap, I want to talk about couple of assets that you do have high conviction on right now, what you like. And first, I want to talk about Venice. DeepSeek AI, all the talk, crashed the market over the weekend or on Monday with NVIDIA and the NASDAQ losing $1 trillion. We've talked about that on yesterday's show, so we don't need to dive into that. But we did not talk about Venice and their VV token that they just airdropped earlier this week. If you're in the Base ecosystem or you own any Base assets, you should check if you're eligible for this airdrop, because you probably are. But tell us about, can you break, what is Venice? Tell us about Venice and VV token, and if you have conviction on this.
Yes. So haven't done a full deep dive on Venice in terms of like the token economics and how this all how this all works. My understanding of this is it's a project from Eric Voorhees, who's like a OG in crypto space, OG Bitcoin. And really what he's trying to do here is like make AI private. So I think my understanding of Venice is it basically allows you to tap into other LLMs and access the insights coming off of those, but do it in a way that you're not like giving your queries away and like someone's stealing your data or spying on you in some way. I believe that's what Venice is. I haven't used it just yet. I did see that. I think if you own virtuals and like some of the other Base assets, like you can qualify for the airdrop here. So I think I will be looking into that since I own a little bit of virtuals. But in terms of like the token economics, that's something I want to look into. And I would say, like, generally speaking, with AI, my approach here has been to make very, very small bets on this stuff. What I like to do with new stuff, like in a bull market like this, is if I see a meta forming or something, invest in like the leader of that, and just a small amount. I kind of just it just allows me to put skin in the game, which is just going to make me pay more attention to it. Essentially, that's what I've been doing with some of these AI things. My intent here is to go deep in the bear market. That's when I really like to kind of get much deeper on some of the research with AI. Like it's unclear to me what the business models of these things are ultimately going to be, and like how, especially something like the Venice AI token, is there some connection with people using that application, and are you paying for it in the token? This is something I haven't.
Yeah, you don't pay for it in the token.
Yeah.
The connection is so what's unique about the reason Venice is getting all the hype right now is because everybody's talking about DeepSeek, and once I think it happened on Monday or some point after everyone started talking about DeepSeek, and everyone's like, it's better than ChatGPT, it's the new AI, right?
Yep.
Developed it for way less money, blah blah blah. Everyone's like, okay, great, let's go use DeepSeek, right? But their like UI is now restricted to only China. So if you're outside of China, you can't access DeepSeek.
Yep.
But Venice jumped in and was like, hey, we'll allow you access to DeepSeek's LLM through Venice. And so there's like a free, you can use Venice for free, is like the entry level, and then you can pay if you want access to DeepSeek's LLM and like other stuff. But the unique connection with the token is that if you it's something around staking the token. I don't remember exactly. I looked into it very briefly before we record today, but basically it's something around, if you stake the token, then you get additional access or something like that. But it's not, you pay like their subscription is cash, like you pay in USD.
Okay. Yeah, it's interesting. I mean, I think, like I said, I'm following all this stuff. Especially these AI agents, which they're not really agents. I don't know if there's going to be some connection here with Venice and AI agents as well. They're mostly like Twitter bots, for the most part, these AI agents. But I'm interested to see where this goes and if a business model forms here. But like, I think for me right now, I'm mostly focused on like which ecosystems are these playing out on. It's interesting that Base is attracting a lot of this within Ethereum. They're doing I think what's become sort of interesting to me is like Base is becoming this onboard for Ethereum. And this is like something we didn't talk about earlier, but like Ethereum does not have a business development team, like a centralized team. And this has really hurt them, I think. And like basically Jesse from Base, the leader of Base, has basically become this for Ethereum in some ways. And so that's something I'm watching, is really which ecosystems are attracting these types of projects. And then, digging into the business models probably a little bit more in the bear market and figuring out, is there like a category winner here somewhere?
Yeah. Yeah. I think VVV caught the narrative and
Yep,
clearly I think they were ready to launch and I think they saw DeepSeek and they were
yep,
like, now let's
yep,
go. Right. And
yep,
so that's why they surprised everybody
yep,
with, well, they've been around since March. They've been around for a while, but they launched their API access
yep,
and access to the DeepSeek LM.
yep.
So smart move on their part. Definitely, I think th- there is a lot of interesting investments in AI coins, VV, virtuals, AI 16Z. But as you said, they're incredibly volatile and none of them have product market fit proven yet. None of them have a moat that would make
Right.
them the winner. I think short term, the leaders will probably do well short term, but they'll probably drop 99% at the end of this bull. Buyer beware, basically. Other than let's take a step back. What other you've been doing a lot of research on meme coins. You don't have to talk about meme coins if you don't want, but what other we've talked lots about BTC, ETH, and SOL, which everybody knows.
Yeah.
What else do you like right now?
Yeah. So my portfolio, like after the Fed cut rates in September, that was kind of the moment for me to kind of move things around and put a little bit more capital into the markets. And my portfolio is mostly like a barbell, like, or at least that's where I structured it to was like Bitcoin, ETH, SOL. Bitcoin is the largest of that right now, actually. And then sort of like went into meme coins. And like what I've been doing with meme coins is trying to identify things using on-chain data where I see something that just sort of looks like it's standing out to me. So we've been doing some pretty interesting, I think, cutting edge work with on-chain data using Dune to basically look at wallet cohorts. It's kind of like taking a lot of the concepts that places like Glassnode and some of the early analysts pioneered in terms of like, can you find like something interesting about a cohort of wallets, such as like wallets that have reached over $100,000 of the meme coin? Like, can we just look at those wallets and determine any interesting behavior that we see that looks different from other memes? So I've been doing a lot of that type of work, and we put out a research report a few weeks ago. We're going to have more coming, but I've been trying to identify a couple meme coins that I think are sort of standouts that sort of have like BTC like features. Is kind of what I'm saying. They look like kind of cultish. SPX 6900 is one we've looked at. I think this has caught a lot of attention earlier in Q4 of last year. I'm not sure where the like if this is going to become like a much more mainstream thing, but I think it does have that potential. I think there's something interesting about the just social aspects of this, and then the on-chain data actually pairs up with it. And it's what's very fascinating about this to me is Murad has been top. This is his top
One of
coin.
his, yeah.
Yeah, one of the ones on his list. What's fascinating to me is he's been preaching about this, like, stop trading, believe in something, hold for a year and like have conviction, all of these things that he's been preaching. I'm seeing that in the on-chain data, which is fascinating to me.
Mm.
He's sort of like manifesting this in the sort of like community of SPX, I think. So that's kind of interesting to me. If we see another big leg to this cycle, I think meme coins will probably do pretty well. So that's one thing I'm interested in. I'm looking at Celestia. This is a project I've written about it a few times as like I thought Celestia and Sui would be two interesting like L1 alternative L1s that might do well. Sui's done very well. Celestia has not. Celestia's basically been down and to the right, like as the bull market's gone on. So I think it's actually interesting to be looking at Celestia. That's a very long-term bet, sort of like betting on Solana 2-3 years ago is kind of how I look at that one. So I'm probably going to be doing a deep dive on Celestia soon. But that's it. Kind of looking at some of these like AI things and just like staying up to speed with what's going on. Otherwise, just monitoring like the broader economy and like
Mhm.
kind of just like
What,
manage the
what's
portfolio.
what's making you look at Celestia? I mean, there's obviously no shortage of L1s trying to get the narrative and be the next
Yep.
L1. And Sui's really captured that, and we've talked about Sui lots on the
Yep.
show, and seems to be a trade that a lot of people have liked. I mean, it's been a great trade so far in the cycle, but
Yep.
could continue to do well. Why Celestia though? What's the appeal there?
I think it's primarily just a bet on the modular, thesis essentially, and where I think we're sort of underappreciating how much block space is going to be needed in the future, and I'm not fully convinced. Like if you think Ethereum, if you're sort of bearish Ethereum, one way to express that is something like Celestia, I think, because Celestia is offering data availability at like a fraction of the cost of Ethereum right now, and so there's a chance that it captures some of the market on Ethereum and also Solana and other L1s as well. So I think there's a chance that Celestia becomes this like really interesting, like, we're calling it an L1. I don't think that's actually like the right way to truly think about it. It's really more servicing like the L2s. It's almost more like middleware kind of. And so there's a chance that like it becomes like very widely used as Solana builds out. Solana may need this if they need L2s. Same thing within Ethereum. So that's kind of the bet. It's just like a bet on like the demand for block space in the future.
Very interesting.
Yep.
Michael, been an absolute pleasure to have you on the show. Thank you so much for joining us today. Everybody listening in, let us know. What do you think? VV token, Celestia, ETH versus SOL, ETH versus BTC. You guys bullish, you guys bearish? Let us know in the comments. Michael, look forward to getting you back on the show again. Might have to get you back when you do the Celestia report or more meme coin. I mean, you got so many great reports, so we'll get you back at some point.
Enjoyed it, Jay. Yeah, happy to come on whenever.
Awesome, man. Thanks for listening in, everybody. Have a wicked awesome day. We'll see you again tomorrow. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.